Welcome back. Well, a good pullback is what we've seen, at least from the low point of the day. Adani Ports, Tata Motors, Tata Steel, they have seen a bit of a spike from the low point of the day. So that's pretty good news. And now, in fact, the Nifty Bank as well has pulled back a little bit from the day's low. Hero MotoCorp as well. You just take a look at that stock. It's currently moved to the high point of the day. So a bit of a fight. Let's see whether or not it can last. I'll tell you what, the 17,980 mark, that's a very, very important mark. So that's close to around 30 points away from current levels. Given that it's expiry, and there is writing at 17,950, where the premium is 30 rupees. Well, you add that 30 rupees to around 17,950, and that's telling you that the bears believe that that level is going to hold out. If the bulls can take the Nifty another 25 points high, I'll tell you what, we could see a quick 40-50 points, in the northward direction as well. So let's keep an eye out on that mark. But Tyre stocks, they are the ones that are zooming away today. Seat, Bolo, Balkrishna Industries, all of them are gaining. As prices of crude as well as rubber, they have seen a bit of a contraction. Sonia rounds up all the action for those tyre makers. Sonia?
Well, thanks for that. The tyre stocks have been on the rise for two reasons. One, of course, demand is picking up across the passenger vehicle sector, but the other is the steep fall that we've seen in raw material prices. Apollo Tyres has hit a fresh 52-week high today. In fact, both crude and rubber prices have been at the lowest level that we've seen in many months now. If you track the prices, rubber prices are now down 24% from the April 2022 highs. Crude prices, as we know, are down 10% in just 2 days, which means that crude prices are now down 40% from the highs that we saw in June of last year. Now, crude and rubber together form about 70% of the raw material costs for tyres. If you break it up, just natural rubber is 50% of the operating cost for tyres, followed by which carbon black forms around 14%, and NTCF, which is nylon tyre cord fabric, forms about 12% of the cost. Both carbon black as well as the tyre cord fabric uses crude as a derivative for manufacturing, and hence there's an additional lower cost over there. Now, the margins of these tyre companies have been on the rise for a while. In fact, if you just look at the trajectory of Apollo Tyres, the margins have been rising from 11.2% in Q4 of FY22. Now it's back at about 12%, and the expectation is that margins will improve further and earnings will pick up as raw material costs subside as well as demand gathers steam.
All right, Deven, your thoughts on the tyre space? I mean, everyone's anticipating some sort of demand uptick in the auto space over the next calendar year, and now with raw material prices going down, do you think tyres are a good place to be?
So, Mangalam, I think the demand scenario was never doubted, I think, as far as the tyre is concerned. In fact, I think the companies which are into the truck tyres particularly are having some of the best times because of the higher demand continuing, both from the OEM side as well as from the replacement market. And I think those who are into the replacement market, I think they're really having relatively better time as well. The last quarter was probably the worst quarter, and that is what I think we've been talking about earlier, that in the last quarter, the maximum impact of the negative margins happened, I think, into the business of the tyre companies. And soon thereafter, with the steady crude oil prices and steady prices of other raw materials, the margins input cost, I think, has probably come under control, and that could possibly stabilize the margin and grow it. I think that was the count. Today, I think we are exactly seeing the validation of that particular possibility. And as a result of which, I think those beaten down tyre company stocks, I think, are now finding some amount of uptick. This market moves in the momentum, and I think these companies, having beaten down earlier, are now finding the momentum back on the long side. And that's where probably I think you're seeing a sharper rally at the rise. Maybe the demand scenario continues good, then probably you should see the rally continuing on a momentum basis.
Deven, there is another stock we wanted to get your view on, and that's ABB. But before that, let me get to Vahishta, because Kotak Institutional Equities has upgraded the stock to a buy. Vahishta, can you tell us more details about this upgrade?
Yeah, thanks for that. Well, Kotak has released a report on ABB, and they say that India is well placed to serve the European demand for IEC low voltage motors. In fact, as we know that Europe is a large market for low voltage motors, which is valued at approximately $2.8 billion US, which is equivalent to 5 times that of the Indian market. And for the motion segment of ABB in particular, Kotak expects strong growth tailwinds from industries such as rail and data centers. In fact, the motion segment is expected to sustain the growth at 1.5 times its market growth. ABB is also working towards simplifying its product platforms to two. One is the standard and the other is premium, and all of this sets a good base for emerging economies to play a bigger role for captive demands of the global parent. India's sales in the low voltage motors division has grown at a healthy 60% in the past 4 years, which is comparable to ABB China's sales. Moreover, the company's offerings is 100% localized and has seen further improvement in productivity over the past 4 years. Now, this boost to exports to Europe can partially compensate for the near-term challenges that the company is facing, which is in the likes of the rising competitive intensity from key motor manufacturers, which are setting up the newer capacities in the country. Kotak has upgraded the stock to buy, like you mentioned, with a target price of 3,100 rupees.
Thank you very much for that. Deven, a quick word on ABB. Do you like it?
Yes, I think question of this particular stock not making result is particularly more because the India's capex program is continuing in each of the space in which I think the AP kind of companies are present, particularly in the green hydrogen segment where the growth is being seen higher. I think we should companies like ABB could possibly play a significantly larger role, both from the supply as well as from the technology point of view. And I think given the kind of momentum which is now getting built across the globe, as far as the world is getting into capex cycle, particularly investment in the renewable energy. In my viewpoint, I think capital goods players like ABB, even for that matter, new contract wins for companies like Larsen, Siemens, I think these are some of the names which definitely would find a good amount of favor from the global market growth, which is basically entering into this particular space along with India market. So certainly, I think any correction in the price which ABB has seen recently, I think is becoming a buy opportunity or an entry point as far as investors are concerned.
All right, Deven, thank you so much for joining in and giving us your views on a whole host of stocks and sectors. Just keep an eye out on specialty restaurants, however, because Mitesh did speak about it being a bit of a breakout, etc. Now it's up 15% and with huge volumes. The volumes are nearly 5 times the average that we see on specialty restaurants, up around 15% higher on that counter, a fresh high for specialty restaurants. But let's also welcome Rupen Rajguru, who is the head of equity investments and strategy at Julius Baer, joining in now. Thanks a lot, Rupen, for joining in. Wish you a very happy new year. It's the first time we're speaking in this calendar year. And